We've got a buzzkill on Kohl. Shares sinking almost 8% after the retailer slashed full-year outlook during its latest earnings report. The company citing a hard-hit middle-income consumer. Here's what CEO Michelle Gass said about the updated guidance earlier on the exchange.
We are expecting the back half of the year to be more promotional as the customers looking for that value. We're also facing inflationary pressures in our cost of goods and things like freight. How long this is going to go on, not sure, but we are doing lots of things around our business to make sure that we can navigate this period of time.
Kohl's now expects full-year revenues to decline versus last year, and earnings estimates have been trimmed by more than half. Karen, this really was not a surprise to you.
You know, I had a grandmother that used to say, if you don't have anything nice to say, don't say anything at all. But I have a daughter who would say, Mom, say what you really think. So, you know, it wasn't about the giant miss, which we knew when they announced those earnings. No way were they going to meet those. It wasn't about the whopping inventory bloat. It wasn't about the category misses. To me, it's about a very, very pressured industry, department stores, and a management team who I don't trust, right? I think they did a horrific job selling the company and at the same time instead trying to pull their own, you know, this is our new plan and it's fabulous, and misleading the shareholders. I can't get over that. So if you want to make that bet for maybe there's a really cheap department store out there that can get it together and can survive, you got to go to Macy's or somewhere else. I don't trust them.
You still own this.
Maybe I should, but I can't.
You still own this stock, though. Oh, you don't. You're completely out.
No, I'm out. I'm completely out.
Okay. Tim, what do you think?
Well, first of all, Karen's been noticeably irritated by this story, as she should be, and this puts more pressure on management, right? So the shares are undervalued. It doesn't mean you chase them, but I think there's a lot of bad news and there's a lot of bad management in this, and it only sets them up that much more for some of the same pressure that they've been under. They can't persist in this environment. So don't really love department stores, really don't like their segment. I think, we have Macy's and Nordstrom's reporting next week, and I think they've got slightly different segments. And I think that's part of the story where they've been more resilient. Also, the inventory issues that Kohl's are going through are very similar, of course, what we're seeing in many other places. The difference is this is a company that doesn't necessarily have the same ability to have a footfall. They're just not in that position. They don't have the same liquidity. And this is something I think investors are focusing on.
Bill Simon yesterday said that department stores have to find a reason to exist. So not only do they have their own internal, maybe management-created, management-enhanced issues to deal with, but they have an industry problem to deal with as well. They sell things that people do not need. You don't have to go there at all, and that's a problem, Guy.
Unless you're returning Amazon stuff, right?
Right, exactly.
Which, I'm one of those people. I actually go to like the UPS. We chat.
I also UPS drop off my Amazon.
Isn't that nice?
Anyway.
Let me put a couple numbers just so we understand each other. Their prior guidance for EPS was basically $6.50. They guided to basically $3. Now, by the way, the street didn't believe them either because the consensus was $4 and they missed that. Then they took operating margins from 7.5%-ish down to 4%. I don't know what happened over that period of time, but clearly none of it was good. So to Karen's earlier point, I dig her grandmother. I'm sure I never met her, but I'm sure I would have. But I'm with her daughter on this one. Tell the truth. And the truth in this case hurts.